Hello, good evening, folks. Today is Friday, May the 6th, 2022. The time is now 6:22 p.m. Eastern Standard Time, and I am recording my weekend market review right now, as I do on a weekly basis, just to give you guys what the technical charts are showing us as it relates to our overall market. So I'm going to get started this weekend with showing you guys a tool that tracks the S&P 500 companies that are trading above their 200-day moving average, simple moving average. And for those of you guys who've been following me for years, you know I like to use this tool because this also is another tool that helps give you overall market sentiment. So I'm looking at a weekly chart right now, and I'm gonna switch to a monthly chart real quick. Let's just show you guys what this tool does. So what this tool does is it shows you the percentage of S&P 500 companies that are trading above the 200-day moving average. As stocks climb above their 200-day moving average, it just becomes more of a bullish stance for the overall market. So it gives the overall market a bullish sentiment as that tool starts to rise in percentage. On a decline of percentage, it shows you that the breadth of the market is leaning more towards a bearish sentiment, which means we could expect a possible sell-off in the market. So you'll see on the chart now, on the screen now, you'll see some up periods and some down periods. Right now, we are in this stretch of down period to my right that you see me have highlighted here within this particular channel. I have a trend line on the top of the channel, trend line on the bottom of the channel. So you can see where the percentages are trading right now within a certain channel. I like to show this whenever I remember to do so, because I don't always remember when I do market reviews, but just to give you guys an overall overview of where the markets were. Back in 2021, around May, we were trading around 97% of S&P 500 companies above that 200-day moving average, as you can see depicted here at the right-hand side, top of my chart, we see 97. That is when we were trading 97% of the S&P 500 companies above that 200 moving average. Then since then, we started to drift lower. Every time we get around above this 90 percentile level, normally the market tends to go lower overall. Stand by 1 second, folks. Sorry for the pause, folks. Sorry for the pause, but I have something going on in my kitchen, so I had to tend to. So when we get between this 90 and 95%, you see the market starts to pull back. That happened here, 2021, here, 2020, the COVID plunge, here, 2017 to 2019, here from 2013, that's about 2015, here, a sharp one from 2011, all within 2011 to 2012. Here, 2010 to 2011. And then, of course, here, 2007 to 2009, which was the housing crisis. So the period that we're in now, it's just unique in itself because of the way it's been trending downward. And one thing I like to point out is that I always pay attention. I've used RSI everywhere. So I have RSI at the bottom of my chart. Always pay attention to when RSI gets very, very close, when the oscillator line and within RSI gets very, very close to the bottom, which is the 30, which is the 30 level. So if RSI hits that 30 level, normally that is a sign of oversold territory. Since we've been at that 97%, the RSI has been drifting lower and a slow grind lower. I do believe that RSI is actually going to hit that 30% level. That's just my personal opinion. So I think we're going to see the same type of scenario that we're in now that we've seen back in 2008, 2009. That's my opinion. Now let me switch back to a daily chart. So here's what the daily chart looks like. And again, you'll see this well-defined downward trending channel that this tool has been in. And I think we still be probably still be trending lower in the near future. So I don't see the market breadth getting any better anytime soon. So again, we were at 97% back in 2020, around April 2020. Now look where we are now, 34%. My first target, I think we're going to hit 30, at least hit 30, and probably see a little bounce in the market possibly. But ultimately, I think we're going to go all the way back down into zero. That's my ultimate target. I think we're going back down to zero. Now let's switch to S&P 500. And we will take a look at a weekly chart first. So the S&P 500. All right, so I pointed out something earlier with folks. That here's some targets that I've marked, targets that we've hit, longer term targets we've hit before in the past. You see the S&P has been flirting around this 4,000 level. And right now you see this long wick above this small body candle. That's how we finished the week. Small body candle, long wick. We could be setting up for a possible bounce here over next week. That's a very huge possibility. So be paying close attention to that. Stand by 1 second, folks. I'll be watching closely for that, see if we get that bounce next week. But ultimately, I think we'll probably fail the support level eventually. Maybe not next week, because of this candle right here could represent some type of possible reversal to the upside or some choppy action. So we'll see how that pans out. That is a weekly chart of the S&P. Here's a daily chart of S&P. Of course, the full stochastic variance percentage both look like they're in oversold territory. RSI hasn't really dipped too far in oversold just yet, so we could go lower next week. We got to see how this happens. We could start the week lower and then find a way to reverse. That is a possibility. And when I say reverse, I'm not saying a huge rally or going back to all-time highs. This may be a short-term rally like we've been seeing within the bear market. Maybe get a little bounce and then come right back down. I think overall, long-term, we are in this longer-term downtrend probably for a while. All right, here is a daily chart of the Dow. They all look the same, folks. Nothing extraordinary. Now let me glance at one of the monthly charts so I can show you guys the overall setup, which is why I say I think we are heading lower for longer. The monthly charts, folks, are just starting to unravel. Matter of fact, let me switch to the NASDAQ. Okay. Show you guys the NASDAQ, and they all look alike, folks. All major indices looking alike right now. So here's the NASDAQ. Here's a monthly chart. As you can see, I got these dashed lines, which is the channel that we're pretty much trading in. So we could get a little bounce here. But here, this solid line, that is a trend line that I drew from the COVID plunge. Okay, that's a trend line. I think we are about to break through that level. We break through that level, folks, we could be headed. I'm sorry, that's not the COVID plunge, but that is that's a support level from a previous level that we started to pull back. We break this level, which is around 12,000. We break 12,000, we're heading back down, folks. Maybe all the way back down to 10,000 on the NASDAQ. And same with the other indices. If we break these support levels that we're hovering around now, I think that the S&P may be around 4,000. Let me see. So the S&P, yeah, if we break that 4,000 level on the S&P, we're probably heading much lower, maybe to around 38 to 3,700. And when I say, you know, maybe heading to that level, you know, we don't know. Nobody knows if that would be the, you know, final say. We got to wait and see when we start breaking some of these support levels. So 4,000 is the level I'm watching to break on the S&P. If we break that, we could be heading much lower, maybe even back down to 3,800 or even 3,500, folks. So we have to see. I think we're in a longer term bear market and maybe even heading for a recession. So that is the S&P. That is the Dow. Let's look at the Russell real quick. Here is our Russell. So the S&P, Dow, NASDAQ, Russell. Russell's already approaching the area where we fell from on the COVID plunge back in 2020. So where we fell from, where we began to fall from, that becomes an area of support, support now. It's like we're about to test that support level. If we break there, we could be heading down much lower, maybe even down here to test where the COVID plunge got its reversal from. Okay, so keep that in mind, folks. We are definitely looks like we are in a midst of a cycle that's heading lower. All right, and let's take a look at two more tools here, then I'll be finished my market review for the week. Actually, three more. This is look at the VIX. Here's a weekly chart of the VIX, and the VIX is just showing the opposite, folks. Look at the VIX. We are about to test have another test at a possible breakout above 40. Every time we got to this level, we pull back. We hit 38, pull back here, hit it here, pull back, close here, pull back, close here, pull back, and over here, you see we got above this level and pull back. I think we're probably going to break this level, folks, again. Maybe finally break it, maybe hit 40, and maybe even go a little bit higher. So that's for the VIX next week or the next 2 weeks. Look for VIX to break out above this $38 level, maybe hit 40. And let's see, let's take a look at, glance at the gold weekly chart real quick. Here is gold. It looks like it's about to hit a support level. And we have to see what happens here. So that's about 1 second. And I'm looking for gold to possibly get a bounce here. I think gold, folks, in this inflationary environment, these metals seem to find a way to outshine. Gold has been trending high, believe it or not. It's been on this trend line, but bouncing off this trend line, creating these higher lows along the way. So gold is in an area of a bounce. It may be a good time to start to nibble at gold. But give yourself some time if you plan to play gold, because it's also volatile. It may take a while for us to see this breakout above the upper trend line. Let's go. Let's take a look at crude. And here's crude. And I think crude is ready for another run, folks. If we look carefully at the full stochastic oscillators, the Williams percentage oscillator, and RSI, I think they're all starting to turn right back up. They're starting to turn back up. So I think crude is ready for a breakout above that 130. It's very possible that we can start to see crude take off here. I ended up buying a USO longer term position, which tracks crude. I put that in my portfolio today, and as well as Oxy, OX, Occidental. I think those two, it's a good way to play this crude oil move to the upside. So I can definitely see USO possibly breaking out above 100 between now and July. That's a possibility. All right, folks, I think that is almost it. One more for those who did not catch this, that I had a little quick update, market update throughout the day today. I posted it on my YouTube as well, but I showed you guys this tool, and I'm gonna show it to you again. If you are having problems finding this tool, which shows the new highs versus the new lows within the New York Stock Exchange and the NASDAQ, you can go to my Twitter page, which is looks like this, at God's Child Tim. And I have this pin, easy access pin to the front of my Twitter page. This Wall Street Journal tool that tracks the new 52-week highs versus new 52-week lows. This also gives you, tell you overall breadth and sentiment of the market. So it shows you how many new 52-week highs were created versus how many new 52-week lows were created. Okay, this reading is going to be at the close of business today on Friday, May the 6th, 4:15. So after the bell, this is what it looked like. So right now, I have the setting on the U.S. Stock Exchange is showing 28 new 52-week highs were created. Let's see how many new 52-week lows were created. 617, folks. That is a huge sign that the overall market is trending lower. The breadth of the market is in favor of the bears. Now let's switch over to the NASDAQ. 26 new highs created. Take a guess how many new lows. This really shocked me today. I mean, the breadth of the market is really getting much, much weaker. 1,116 new lows created today, folks. Could we be almost at a bottom? We shall see next week. I doubt it. I think we'll probably see a little slight bounce. But even with these rallies, if you see a big rally on a day, come check this tool out. If you see Dow up 1,000 points, 700, 800 points, come check this tool out. If we do not have, a flip of these two, if we do not have more new highs being created versus new lows, then that rally will probably be sold. So keep that in mind. If you see a big rally in the market, come check this tool out. If you don't see more new 52-week highs being created, then don't fall in love with that rally. All right, folks, that's all I have to share with you guys for this weekend's review. I will catch you guys next week. Enjoy your weekend, folks, and hopefully this helps you out a great deal. All right, I'll probably later on this weekend, I may do another video where I'm recording, giving you an update of all the stocks that I am in and show you guys what I'm looking for as to the positions that I'm holding. All right, have a great weekend, folks.